Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. There's a thought I'm going to leave you with. The rules of trading, they're the same for any business. Number two, we're all familiar with that, right? We all want to do that. Y'all need to do that to stay in business. That's make money. But you can't forget number one. That's avoid liability. First market we're going to take a look at will be the Australian US dollar. We talked about this last week, how you had that nice setup there. You had that nice double top in place. We felt pretty strongly you'd see more downside, and you certainly did have it, right? Big sell-off middle of the week in the Aussie dollar. You really hit that market pretty hard. You did have a short covering rally. However, Friday, you could see that here on the 4-hour chart. You had a little bit of a disappointment in the U.S. employment number, and that sparked a short covering rally in the currencies, a little bit of long liquidation in the dollar index. We feel you have a little bit more downside in the Aussie still. Let me pan out to this graphic. We have our long-term target on this chart. We talked about that. That's a 625 retracement, and that's a Gann line. But when we plug in the 50% retracement, that is the 50% retracement of this overall rally from the 2009 low. That 50% retracement comes just below right there. So that's a natural area where the market would pause to take a breather. So we're not going to be so aggressive in pressing shorts below that level. It's right around 85.30. So you may look for support on the approach to 85 even. Just kind of a natural area for the market to take a breather. I also want to point out when we had this short covering correction in here that lasted throughout much of October, by the way, the market was consolidating. That was sparked by a poor retail sales number in September. The September retail sales number came out in October. If you had a similar number for the October retail performance, again, that it did it once. It wouldn't surprise us if it did it again. The market's kind of at a natural area where it would start to consolidate. Looking at that 4-hour chart, we do think there's a little bit more room on the downside potentially, but it's getting a little bit too close to support to justify going after it much more. Next market, we're going to take a look at the euro. They continue to hit the euro this week. We talked about that last week, how when you penetrated that green line there, when you penetrated support there, that really opened the door to the downside. You had some decent U.S. economic data that continued to pressure the downside here in the euro. When we pan out to a futures chart here, there it is, weekly chart. You see very similar. You see eventually you're going to come across support down here just above 120 or so, 120, 170. You're going to potentially see some support there. Very similar. When I go back to that daily chart, very similar to the Aussie. This short covering move here was prompted by poor U.S. retail sales the month before. Again, if you don't have a gangbuster retail sales number, you could see very similar results. So euro is one where we think there is a little bit more downside here. Potentially you stretch that to 122. There's definitely some downside still there, but we'd be a little bit leery ahead of this week, because if you start to see a little bit of slow U.S. data, we don't necessarily think that's reflective of the data you're going to see come year end based on the holiday season. We think you'll have a strong retail season then. But for now, you need to be cautious as far as pressing shorts in these levels based on what we're seeing across the board. And we'll show you more of that also. Swiss franc, we still think you have a lot of room on the upside here. However, if you start to see these other currencies consolidating, if you see the dollar backing off on bad U.S. data, that par level may start to fade a little bit there. So be aware of that. Dollar index, same story. Big week. No surprise that we saw a continuation on the upside. And along that lines of consolidation, it really started with the Aussie on down to the euro. Let's take a longer term look at the dollar index. If you pan out, you see you're at these same levels that stopped that market in its tracks in the past, in 09 and in 2010. You're getting some pretty lofty levels here. And we talked about this on this initial breakout, that we weren't concerned about resistance at 84 even in the dollar so much as we were at 88. And we called it back then. We said, hey, when it got above 84, we said, don't necessarily worry about that shorter term resistance. We think this market's got the juice to get up to 88, and it did. It sure did, didn't it? Now, however, different story. Again, if you had a little bit slower than expected U.S. numbers, you're already at resistance. You're getting late in the year. You got the holidays coming up quick on us already, right? You're only a few weeks away from the U.S. Thanksgiving holiday. So it would seem to me this would be a natural time to take a pause and even take a break here. And you know, the corrections in the past in this dollar rally, it's been great all along. They've tended to be more sideways than not. Here you had a little bit of a pullback. You start to get a little bit of violence in there, a little volatility. So you never know what form of correction is going to take. You want to be aware of that, because if it gets a little bit volatile, and that'll cause you to, you know, that'll test you. That'll test even the strongest long. So these markets are setting up, and you'll see it in the commodities too, where it's only natural that you'd almost expect a correction at this point, given the magnitude of the move, right? Here's the gold market. Speaking of counter trend moves, here's what's cool about gold. Here, we'll pull all the way out to the weekly so you can see it. You stopped right on a GAN 625 line, a 5/8 retracement. So the market has done a 5/8 retracement of this entire rally up. You have a 5/8 retracement. You stopped on it right there. Pull out to a monthly chart. You can see where that trend line is coming from. So commodities here, gold, kind of the fear indicator, is also giving us signs of a potential recovery here. I certainly wouldn't be calling for a sea change move in this market, but again, it's just a natural area in the chart, a natural area in time coming up on year end. Especially, you're seeing a little bit slower economic growth. We think that'll accelerate through the holidays into next year, but for now, it's natural that the economy, the markets take a pause. So again, the commodities here, the gold market's telling us, yeah, you could be ready for a pause in that blitzkrieg dollar rally. Gold, not as much of an influential commodities as these two guys. Here's your crude oil market, and here's crude. That's a monthly chart. Here, I'll back it down to a weekly chart. You can see similar story. You're coming up on support in the crude also. It's been great. It's been beautiful for the economy. We don't see a quick turnaround for the crude. We think Americans will continue to enjoy lower energy prices through year end. But for now, you know, you can see the downsides starting to shrink up there. The market's starting to reach for that 50% retracement, and that's a natural area where we see potential support coming in. Here's probably the most influential of markets. This is the 10-year note. Here on a daily chart, like so many of the charts, you saw a counter trend move late on Friday based on that little bit disappointing U.S. jobs number. There's a market where, you know, that's a nice turnaround on the daily chart. It's a nice turnaround on the weekly chart. We talked about that weekly change of direction, but that doesn't mean they repealed the law of gravity and you're not going to see some consolidation. Here's what I want you to see on that market. Look at it. It paused right on that GAN 625. So you have a short-term GAN 625 that market held up on. And again, interest rates, the bond market, the note market, you're looking at very sensitive to U.S. data. No doubt about it. So if the underlying fundamentals appear to soften up a little bit ahead of the holidays, the markets are going to react to that, and we see a potential reaction in the way of a correction in the dollar. So that's what you may be looking at this week in the market, so you want to be aware of that. Thank you so much. Always a pleasure to see you. My name is Jay Norris. I teach trading at Trading University, and we'll catch up with you next week.